So, what is today's solo rip about? Well, I get asked questions about Bitcoin all the time. I ask people about Bitcoin all the time. And shout out to Jaden, who's been my PT for the last 4 or 5 months. And often, like, we're working out, or I'm working out, and he's getting me to absolutely, work my hardest. And we have conversations about Bitcoin. And I'm obviously often advocating for it. And often you get into a real state of flow, whether you've just done a set of heavy weights or, you're really panting hard and you just get like crystal clear thoughts. And so I asked him, what are your three main questions? And we've been talking about what it might be like to do some content whilst working out. Now, I have yet to do that. It might be something I do in the future, but I thought, you know what, let's do this. The week that I've been moving house, etc., lots going on at home in my personal life. I haven't scheduled any guests in. I'll do a solo episode in place of that. And why not focus on some beginner content? So I've asked Elon, essentially, Grok on X, what are the 21 most common questions a beginner asks about Bitcoin? And I've got it here on my phone. And we're going to crunch through all of these. And I don't know how long it's going to take me, but I'm going to more than likely chop them up into individual episodes just to make it a bit easier. And potentially we'll do maybe 7 questions per episode. I've also got a beer. Cheers. And it's Saturday night. And this is what wild Saturday night for me. I'm going to pump through these and just really, I guess, savor the moment that, we've reached 50 episodes. Couldn't be more excited to be building this project. And so far it's gone very, very well. And I think the main feedback that I'm getting that's the coolest is you get guests asking me to interview other friends of theirs who are doing equally cool stuff that I had no idea about, or equally audience members reaching out to me with stuff that I find really interesting and valuable and then getting them on the show. And one of my core principles being is I don't necessarily care about someone's digital footprint. If the information and the story is of high value, then please get in touch and teach me what you've learned. And I think I'm getting less interested in necessarily investment cases for things, but more just like a deep sense of curiosity for as many subjects as I can. And this is the beauty of branding it under just my own name, which is I can actually start to roam wherever I want, frankly. And we've had some great health focused episodes that have been super insightful and ones to go back and find. So, all right, we're going to kick this off. I'll obviously leave a URL in the show notes for this exact set of answers that I got given. The idea of this is like, this is just me, okay? This is my take. These are my opinions. This is what it means to me. And ultimately, do your own fucking research. Figure it out for yourself. Feel what this thing means like to you. Actually start using Bitcoin. Ask every question you possibly can. And well, for me anyway, it's been an incredibly enriching process. So number one, what is Bitcoin? Well, it's money. Bitcoin is just money. And then you go, okay, well, what is money? Well, what is money is, to me, probably the most intellectually stimulating question I've ever asked in my life. And one that continues to throw up answers, a question that continues to throw up answers that I hadn't considered before. But when I think of what is money, well, money I think of as a technology. Money solves a very specific problem. Money is something that humans and humans alone, I believe, have developed in order to trade with each other. So the thing I always found most helpful when asking the question, what is money, is actually a history lesson on the types of money that we've used. And you can go as far back as you like, but when humans had, well, when we existed in small hunter-gatherer tribes, we actually had very early forms of debt. So I would be the hunter and someone else might be the fisherman, and I want to trade my, gazelle for a fish, and I one week would catch something and they might not. And so you'd be like, okay, you owe me some fish or I owe you some gazelle. And because the tribes are very small, you can figure that out in your own head. And so, small packs of people, they all know, okay, roughly I owe you this much, you owe me this much, and you can kind of keep it in your head. Now, that is a very early form of credit. And if you haven't read Broken Money by Lynn Alden, this is one of the key concepts I got out of that book that I hadn't covered before, that basically debt is a very, very useful thing, right? I owe you. Like, fair enough. Okay, I'll pay you back in the future. Now, there's all sorts of different types of debt. That's not what this question is about, but definitely look into that. Anyway, as things get more complicated, and let's say another tribe comes along, it's like, well, how do you trade with the other tribe? You can't be like, oh, you owe me some fish, because you might never see them again. And so we started using things like glass beads, ornamental shells, and there's a very famous story around the Yap Islands, these things called Yap stones that we used. This developed into more kind of commodity style monies, like a bronze, a silver, a gold. This very what's the right way of saying it? Like, this dates back, well, when are the first types of coinage used? I think this is King Croesus, and hence Jesse Myers's original Anon profile. If you haven't come across his work, it's absolutely fantastic. Thousands of years ago, essentially, we started using coins, and this developed into the most probably important phase for money in my view about 150 years ago, the Gilded Age, which was a true gold standard where every nation's currency was pegged to a specific amount of gold. This transferred, and again back to broken money, into then the development of the telephone, and the communications networks that we had were basically, they were faster than gold. You couldn't send gold from the UK to the US, but you could send some kind of paper derivative of it, and that's really where fiat currency saw product market fit, is you could send it across space very, very easily. To do that, however, you had to centralize the system. So you had to give someone, aka a bank, your trust that they were going to balance their books correctly. And anyone who is my age, 36, has seen multiple bank runs in their lifetime. And I'm from the UK and now based in Australia, so fairly well run financial systems. Other parts of the world, not so good. Anyway, back to the question of what is Bitcoin? Well, it's money. And money is something that over time has changed. Humans have tried thousands and thousands and thousands of different iterations of what makes a good money. And this is when I found, for example, the Austrian School of Economics. So there's a guy called Carl Menger back in late 1800s, produced a book called The Origins of Money. And essentially there have been people studying what is money as a question for, like, well, in this case, 150 years, but very, very deep analysis into this question. And I, for some reason, conspiracy maybe, but highly trained into how to make money, in that I went to business schools. I come from families that run businesses, and always thinking like how to make money, how to make money, how to make money. It's like, well, never once stopped to ask the question, what is money? And that's the key thing about Bitcoin. Basically, Bitcoin is just another iteration of the history of money, and 100 years from now will be looked back upon as an absolutely critical ingredient for the adoption of the digital world. And so I now see Bitcoin as purely a form of money, but also digitally native. And we can go into more specifics about what Bitcoin actually is and how it functions. But just to continue on this idea of like what money is, well, there's a certain type of characteristics that make a good money. And this is why it's really important to think from a first principles approach with questions like this, with this kind of question. And so, forgive me, I'm not going to remember every single characteristic, but for example, divisibility, durability, scarcity, fungibility, these are all things that make a good money. So, for example, you use grain as money. Well, grain perishes. So actually, grain's not a very good money, because a couple of months from now, what I used as money is going to be germinating and sprouting. And the same could be said for like the stool that I'm sitting on. Like, you can just make loads of them. So what's the point in having a stool? Or a stool's also not very portable, right? Like, how do you carry around bits of furniture as a form of money? Anyway, as beginner content, I just encourage you to ask this question, like, what is money? And you'll find that actually there's a very clear and methodically thought out system of which, like, okay, well, these types of characteristics are the kind of things that make you really good money. And until Bitcoin, in my opinion, gold was the best form of money. And once you've looked at those characteristics, well, certain things immediately just don't really work. But what the Austrian school points out so well is that it's essentially the most saleable good. So if you find something that ticks every box, I think it's about 6 characteristics that you're looking for, then that's the most saleable good. And so think about a marketplace. You go to the marketplace with whatever you have produced, whatever you've specialized in, and you want to leave that marketplace with as much return as you can possibly get, with as much optionality as possible. So if you turn up and just start swapping your stuff for other items that you've got to then transport back somehow that might perish or they're too big, like that's actually not very useful. And so that's where this idea of the double coincidence of wants appears. And so again, going back to that early idea of a tribe, I can just remember what I owe you and you remember what you owe me. But suddenly you've got a marketplace with all these different people coming from different places, and in engaging in voluntary trade, money was the technology that appeared from the free market to solve the problem of double coincidence of wants. So if someone has 30 oranges and you've got one banana, well, you can trade the fruit, of course, but equally, wouldn't it be just much easier if you could use something in between that meant that actually you just pay for that one banana and you pay for that one orange? And that's what money is. So money itself is the most saleable good. It is actually a good itself. So it's like a thing. So you can use different things as money. And it performs three key features. So the features are, and the ones we're most familiar with, the medium of exchange. So it's like you turn up and you use your money to get things, right? But you can also call it a unit of account. Second feature, the unit of account, you're on your spreadsheets, you're looking at the values of things, you're looking at prices, and a lot of information is portrayed in a price, right? It's like, actually, it's quite incredible when you go into a grocery store and all these prices all around you signal value, but equally represent everything that went into that one thing in that moment from the entire supply chain and all of the different bits of trade that had to happen to get that one item there. Recently, I had Max Hillerbrand on the podcast. Shout out to Max, and he told a brilliant story as to like how hard it is to make a pencil. Like one individual does not know how to make a pencil. It requires specialization. It requires trade, and money is the juice that keeps the whole thing kind of going. And so, as I kind of finish this thought process, like you ask the question, "What is money?" And then suddenly you start to see there's this very systematized process of like, well, what makes a good money? And just Bitcoin is the perfect money. And so, as a beginner, if you haven't asked the question, what is money? Do that first. But then when you start asking that question, you can dig into it a bit further and you start to see how Bitcoin matches up to what was previously studied as hypothetically perfect. Like there's some great quotes from Austrian economists from like 30, 40 years ago that pre-Bitcoin, they were basically describing Bitcoin, right? The more that you can ground your research in things that make sense from a first principles perspective, the better, because Bitcoin suffers hugely from what's called FUD, so fear, uncertainty, and doubt. And basically, the status quo system is not just willing, but fully able to throw a lot of shit on this new thing, and that is namely central banks. And central banks are extraordinarily powerful because they have monopolized the ability to print money in certain geographic jurisdictions. And it's absolutely crazy when you start asking the question, well, what is a central bank? The final and third feature is store of value. And actually, shout out to Hubertus, who just came on the podcast and clarified this for me for the first time. I didn't understand this properly, but store of value from an Austrian economist perspective was simply the ability for the money used to just hold value in the marketplace. So retain purchasing power. And if you don't know what purchasing power is, you need to find that out. That's a very, very important point. But essentially, your money you can spend or you can receive, or equally, you can measure the value of things through prices with it. And finally, if you just held it, i.e., saved it, it stores value. And this is a really critical point because I actually, as an investor, I buy Bitcoin primarily for its store of value function. Pre my conversation with Hubertus, I was of the opinion that store of value also equaled capital growth. And that was the beauty of Bitcoin. But actually, a pure Austrian economist perspective is that store of value is simply just holding purchasing power, not necessarily growing. I'll come on to that later because that's a bit more complicated. But okay, cool. We've talked through the features of what money is. And so Bitcoin basically is, it ticks every characteristic unbelievably well. It then does all three of the features that it's required to do. So you're like, it's just money. Now, what is Bitcoin specifically? there's going to be more questions about this, but again, it's, for beginners, and I want to try and be as straightforward as I can be about how I think about this. It's digitally native. So that means that it functions online. Like, that's how it was designed. It's peer-to-peer. So this means there's no middleman. There's no bank, there's no central bank, there's no government, there's literally no one in between you. And then it's described as peer-to-peer electronic cash. So in the same way that you have your dollars or your euros or your pounds in your wallet today, you exchange those with someone else. You've essentially passed those notes to someone different. And there's a whole, what is cash is a great question that I encourage you to ask, because it's actually not altogether that obvious, but there's different types of cash, and there's some reasons why cash has good properties and bad properties. And yeah, shout out to Andrew Bailey here, who's written an excellent book called Resistance Money. He also came on my podcast, which you can go and check his episode out. But he talks in the book about forwards privacy and backwards privacy. It's like when you take cash from someone, you don't know where that cash came from. And equally, when you pay in cash for something, the person that receives it, you don't know where the cash is going. And so Bitcoin is designed to behave in a similar way, but it's not quite the same in that every single transaction on the Bitcoin network ever done, which is basically since the start of 2009, is recorded on the Bitcoin blockchain. And so if you're able to understand what the blockchain says, and this is where someone like James Check does unbelievably interesting work as an engineer looking at the data that's been pumped out by the Bitcoin blockchain specifically. This is called on-chain data analysis. So James can look at okay, well, how many wallets are there? How much Bitcoin's in each wallet? Where's it all been sent? How much is moving? What's likely to be, Coinbase apparently have 2 million Bitcoins or something crazy I read about today, all in one place. And that's one of the biggest crypto exchanges in the world. Long story short, there's like a set of accounts that Bitcoin keeps. And those accounts are the history of every single trade it's ever done. So you can see like Bob and Alice and Bill, and they do their three-way kind of example in an economics class. Same kind of thing, but for everyone ever done. And I don't know what the total amount of transactions is, but to give you an example that helps bring this to life, at least did for me, is that the last time that there was a major shift in how we accounted for things. Well, let me do it like this. So, okay, Robert Breedlove, shout out to Robert. He's taught me so much over the years with his research and work. He wrote an article called "The Importance of the Number Zero," or something like that, or Bitcoin is as big as number zero. And basically, there existed a time in mathematics where the common wisdom, they were still using fractions. They hadn't understood decimals. And so you couldn't go, 0, 1, 2, 3, 4, and then go, actually, hang on, we're going to go back into a minus number. They hadn't figured out the use of zero in arithmetic. And you just think about how difficult that would be to calculate anything. And that was a massive moment in the common wisdom. And I say maybe there was outliers that understood how to use zero, or certain societies somewhere, but most people globally were trading without the ability to understand zero. And Bitcoin is as big a deal as that moment, right? And the second moment I want to bring to life would be that this is like basically how the Medici families in Florence got going in the Renaissance 500-600 years ago, was double entry bookkeeping. And if you've ever been to Florence, there's a bridge where the moneylenders famously sat in these little booths, and basically the debit and credit column, very simple accounting process, those weren't used before, basically. And so I could come to a friend of mine who was running his basically a form of bank, and that's how banking began to some degree, or what we think of banking today. And I could deposit my gold or deposit my coins, and then actually I wanted to trade with someone else, and it's easy just to tell the bank to transfer the money to them rather than the bank, rather than physically doing that transaction. And so the ability to do double entry bookkeeping became popular, and obviously was pouring gasoline on an existing fire in terms of modern trade. And the Renaissance was backed by a form of sound money, which is again a phrase from the Austrian School of Economics that I recommend looking into. Bitcoin is what's called triple entry bookkeeping. in that it's a credit and debit column, but instead of trusting the banker to keep those credit and debit columns in line and correct, the Bitcoin blockchain is an open and public ledger. So think about the banker sitting on the bridge in Florence, and he's got this big book, and he's putting in his credits and debits, and he's got all these different customers, and he's matching them together. It's like that big book is the Bitcoin blockchain, and it's digitally native and censorship resistant. We haven't talked about that yet. It's very, 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 very hard to change Bitcoin. Like Bitcoin itself hasn't changed from the way it was designed, predominantly in that there's been a couple of tweaks to the code with some updates that are all what's called consensus agreed. Basically, this is a massive, massive topic and has consumed so much of my energy the last 5 to 6 years, like figuring this out. So what is Bitcoin? I mean, I could keep going for ages. What I'm going to try and do is finish off this question here by just summarizing where we got through, right? So what is Bitcoin? Well, it's just money. Okay, well, what is money? And then you can look through that. And then it's like, well, what is cash? Okay, well, cash is a different type of money. And then it's a triple entry bookkeeping system that's basically impossible to change. And so is this as big a deal as fire? Yes. Is this as big a deal as the internet itself? Yes. And is this as big as, the wheel or the car? Yes, absolutely massive deal. And so if you've got this far into the podcast, it means you're already paying attention and you're already asking these questions. So cheers to that. All right. This might take a while if that's how long it's always going to take. So the second question, who created Bitcoin? Okay, great question. I don't know. What is the most reasonable story? Well, first of all, so Bitcoin in October of 2008, something like that, the Bitcoin white paper was published from an email address from someone called Satoshi Nakamoto to a cypherpunk group. And famously, the Genesis block of Bitcoin actually had in it a front page headline from the Times newspaper. It was quoting Chancellor on brink of second bailout. So very clear reference from the creator of Bitcoin to the fragility of the existing banking system. And like, what's a bailout? And why is a central bank even in existence? That's not going to answer this question, but these are the things you need to look into. So who created Bitcoin? I don't know. Could it be one person? Could it be a group of people? Maybe. But does it matter? I think is a better question. Does it matter if no one knows who created Bitcoin? And in my strong opinion is no, it doesn't matter. Now, yes, it's true that Satoshi, whoever he, she, they were, they've got 1 million Bitcoin sitting in an address somewhere. Like on paper, they're one of the richest people in the world. Like how has that Bitcoin never moved? It's absolutely mad. And there's this guy called Craig Wright. He claimed to be the founder of Bitcoin. He's been taken to court. He's a complete fraud. But if he was the founder and if he did create it, all he had to do was move that Bitcoin. Because in the Bitcoin space, we have this phrase, not your keys, not your coins. And in some ways, this is one of the beauties of it, right? It is digital property rights. If you don't have the key, you cannot move the Bitcoin. It doesn't matter what a lawyer says. It doesn't matter what a government says. It doesn't matter what your best mate says. It doesn't matter what some dead person's will says. Like if you don't have the keys, you cannot move the Bitcoin, which means it's not your Bitcoin. So is the wallet of Satoshi ever going to move? Like, is everyone ever going to move it? Maybe. If they did, what does it mean? Well, would the network continue to function as designed? Would it continue to store value to send and receive value for people? Yes, it would. And therefore, I don't think it would actually matter that much. Now, yes, there is an extraordinary story here, right? Can it be the case that the future of global money was created by someone who was so aware and so, like, in some ways it's the most selfless thing a human has ever done, to create this much value for this many other people, throw it out in the world, and then disappear, to take no credit. Like, that is the most selfless thing I think I've ever seen. And what's cool about it is then the the characteristic of that, or the influence of that, runs so deep through Bitcoin itself. And when I look at people who've adopted this thing in a major way, aka Bitcoiners, who I've met, many of them now, and I would consider myself one too, the type of person, the way that their mindset has evolved as a result of using Bitcoin, it's embedded in that selflessness. It's quite extraordinary. Anyway, I'll keep that one short. Who created Bitcoin? I don't know. And actually, frankly, I don't care any longer, because in my strong opinion, the network will continue to do exactly what it says it does, even if we found out. Um, Yes, okay, fine. There might be some kind of attack vector. Like, if there was a CEO, there'd be a far higher risk. All they got to do, like recently, an example being Telegram. Telegram, supposedly this private messaging app, and before you know it, the founders in France and the French government are like, "Oh, we don't like people being able to send stuff online that we can't monitor or we can't change. We're going to put you in prison, or you're going to have to change how your business works." You cannot do that with Bitcoin, right? It's like a headless beast that you can't chop the head off. So what are you going to do about it? It makes it very, very well defended, I think is a good point. So yeah, okay, who created Bitcoin? Don't know. And actually, I definitely care. I'd love to find out. But I don't think it matters all that much. How does Bitcoin work? Okay, this I think comes back to the idea of the triple ledger accounting system that I have touched on in the answer to the first question. There's a few things to this, but at a very, very, very high level, kind of, I guess, beginner, this is for beginners, I hope enjoying this. Bitcoin allows you to send money, receive money, and store money. Now, how do you do that? Well, you need an internet connection, and you can spin up a Bitcoin wallet on your phone in a matter of minutes, and I could send you Bitcoin. It would really take no time at all, and you could then spend that Bitcoin on something else. So Bitcoin, like, very simple level, how does it work? Well, it allows you to receive money, allows you to send money, and allows you to store money. Now, what happens under the hood is you have a very, very, very cleverly engineered digital system that maps real world energy consumption to a form of digital gold. That's probably the best description I've come across for thinking about what it really represents. So, to walk you through gold, like, gold is obviously the previously to Bitcoin, probably best form of money, in my opinion. We use it in jewelry. I have a gold chain on, for example. Like, we know that gold is valuable intrinsically. Now, why is it valuable? Well, because of a level of scarcity. Like, gold is really hard to find. So you think about, the Californian gold rush. People were emigrating from Europe to try and get across to West America and find gold somewhere, right? Or equally, like where I am, Australia, like, there's old gold mining towns that you can find, and people came from all over the world to try and find their fortune. And there's a huge amount of work that goes into finding gold, and therefore when someone has physical gold in their possession, it it holds value, and so you can then use that as a form of money. And this kind of, I guess, maps back to asking that question: what is money? um but let's say we're recreating a digital version of gold. We've got to make it really, really hard to get. And that is probably the number one thing about, like, what happens behind the scenes with Bitcoin. And it's called proof of work. And this is the critical difference between Bitcoin and everything else in the crypto market, is the proof of work system behind Bitcoin. So to get Bitcoin from what I would call virgin coins, basically, step back here. One of the things about Bitcoin that is absolutely critical, and why it maps onto the Austrian School of Economics theory of sound money, is a fixed money supply. So I know that the Bitcoin network will only ever have 21 million Bitcoins. And that was put in law, written, like, using code as law, if that's how you want to look at it, the day it started, in 2009. Now, actually, the majority of those Bitcoins have already been what's called mined, i.e., they've been issued by the algorithm. And the final Bitcoin will be issued something like 100 years from now, 2140 or something. But basically, there's new Bitcoin being issued by the network itself as payment for doing work. And this is where you have Bitcoin mining and you have Bitcoin nodes. And so Bitcoin mining is like, if you think of gold mines, like gold mines are out there digging the earth up, sifting through, finding the gold, and they get to keep the gold that they mine. Well, what happens with Bitcoin is you have a very specific type of hardware called an ASIC. And that ASIC is plugged into an energy source. Like what it could just be, well, back in the day, you could do home mining and it was cost effective to run miners in your own home off the mains. That's no longer the case. Now you need energy source that's like as close to zero as possible, maybe 2, 3, 4, 5 cents per kilowatt hour you can get away with. But people are basically like how do I say this? The current hash rate, i.e., the total capacity of the Bitcoin mining network, is the largest collection of computing power ever created. It's extraordinary. And it's completely decentralized. So it's in every country, anywhere you can imagine, people are mining Bitcoin. And these guys are basically using this hardware to crunch what's called a SHA-256, which is a cryptographic algorithm that helps you to, again, this is getting quite complex for beginners, but the SHA-256 is basically it's a roulette game. They're just playing it over and over and over and over again until eventually they choose the right set of numbers that helps them then create a correct block on the blockchain. So you see all these transactions, they get into separate blocks, and the blocks then get built on top of each other. And the SHA-256 algorithm is what the ASIC miners are constantly running in order to basically do enough work that they're using electricity the whole time to guess the right number. And it's that hard work that gets paid. And so the reason Bitcoin itself holds value is because of the ability to be attached to real world energy. So you've basically got this huge network of Bitcoin specific computing power. I call them data centers. That's really what ASICs actually are, that are running all around the world. That are they're like this. They're like the security department of Bitcoin. And what they're really doing is they're stopping people from spending Bitcoin twice. So they avoid the double spend problem. Because if you think about it digitally, like you can just control paste, right? You can just copy, paste, copy, paste, copy, paste. And Bitcoin in some ways is actually, it's the innovation of, or the discovery of, digital scarcity. So when you send Bitcoin from one address to another, it cannot be sent twice. It's gone. And this is where you have to be very careful with Bitcoin. If you send it somewhere that you're not supposed to, you're not getting it back. And that's a feature, not a bug. It forces you to be truly accountable for your stuff, right? You're being your own bank. You no longer need a bank. You use the Bitcoin network. And so really what Bitcoin is a savings technology. And it's a savings technology that's built on cryptography, decentralization, Bitcoin mining, Bitcoin nodes I mentioned. They're kind of like the accountants. So I ran a node for a bit. I think there's something like 30, 40,000 Bitcoin nodes around the world. They are the accountants. They keep every single transaction, and they will try and flag when someone's trying to spend the same one twice. So you basically, it's very difficult to trick the sets of nodes. And if you do trick one or two, the other ones have likely figured it out. And then those one or two that get tricked will realize that they're not actually keeping the right set of accounts, and they'll drop the RAB ones and pick up where everyone else is. Try and summarize this one. Bitcoin helps you to send money, to receive money, to store money. Bitcoin itself is built on a modern miracle of, that phrase, building on the shoulder of giants, is completely true with Bitcoin. There's 50, 60 years of computer science that's gone into getting us to this point. But a critical thing that what Bitcoin actually does is it matches digital world with physical world through the use of Bitcoin mining. And that, I think, is key. So that the Bitcoin miners are the ones that get paid for helping produce the transactions on the Bitcoin blockchain. And it's then the nodes that are helping make sure that everyone's playing the right game. Is that the answer a beginner wants to hear? I don't know, but that's what's come to me right now. So what is a blockchain? Okay. this is question number 4. A blockchain, like I've just touched on, is obviously it's digital, and in some ways, I think I'm of the opinion that the only blockchain that matters is Bitcoin, because Bitcoin's the only base layer future of money that we're going to use. And all these other crypto projects that are talking about blockchain, they're basically expensive databases that aren't actually decentralized and really don't perform a valuable real world use case. So I'd be completely unsurprised if most crypto projects, I'm talking 90, 95%, 99% of them just completely disappear over time. You only have to look at the Ethereum Bitcoin chart to see what is going on there, right? In terms of price action, it's just, it's lower lows every time for those guys, just falling away against Bitcoin. So a blockchain is it's basically let's say, so the Genesis block I touched on before, Chancellor on brink of second bailout, written into the code as a nod to like central banking and like what the hell's going on there. And a central bank essentially is running a private ledger in which they can issue as much or as little of the monetary units as they want. Now, whether they do it through different types of debt, whether they call it stimulus or quantitative easing, or you name it, it's an inflationary monetary policy. And what the Bitcoin blockchain does is it basically writes into a extraordinarily well protected database of transactions. And so each block, which is currently every roughly 10 minutes, will contain a set of transactions that were processed. And so you talk about the Bitcoin blockchain as essentially a database of transactions on the Bitcoin network since Bitcoin started life. So early 2009. So each Bitcoin node has a copy of every single transaction ever done. And so to kill Bitcoin, like, it's extraordinarily hard to do that. Like I already touched on, there's probably 30, 40,000 nodes globally. So you'd have to go and find every single one of those and destroy it. And if just one of them makes it back online, then you've got every transaction that ever happened, and all the other nodes can suddenly pick up where that one true source, continues from. So that's why it's decentralized, right? It was the ability for people that run nodes to do so with very small computing capacity. And there's an ongoing discussion as to like, oh, well, Bitcoin, in order to be competing with MasterCard, it needs to be doing thousands and thousands of payments per second, and it can only do, a couple. Therefore, it's going to fail because it will never be a payments layer. It's like, well, actually, what's probably more important is firstly the use case of digital gold, a digital version of gold that is able to send value across space and time is a complete game changer. And that's where gold failed, essentially, is it was good at storing value over time, but not good at storing value across space. Chopping up gold bars is not easy, and it's more expensive to send your gold to someone on the other side of the world than it is to actually perform the transaction. So what is blockchain? Basically a modern form of technology that is possible due to certain types of cryptography, and there's been this iteration process for decades as people built new things. Like there was a project called Hashcash, project called eGold, eCash, and eventually they've ended up with this proof of work blockchain that Satoshi, really that was the innovation in some ways that hadn't been done before. The Bitcoin blockchain is where all the data is kept for the history of transactions. And so if you open a Bitcoin wallet, or if you create a Bitcoin wallet and you receive Bitcoin into it, that transaction is on the Bitcoin blockchain. If you then send Bitcoin somewhere else, that transaction is on the Bitcoin blockchain. So it's like a source of truth. I've even heard it described as a time machine, in that it's time stamping. So every transaction that goes through time. So it's kind of like a clock, which is a really fascinating concept. It's like, what do you mean it's time chain? And yeah, I mean, again, beginner's content, but I'd recommend you looking into that. So question number 5, is Bitcoin legal? Well, it depends who you ask. In my opinion, Bitcoin is legal. And in a lot of people's opinions, Bitcoin is legal. There are, well, I don't know how many daily active Bitcoin wallets there are currently globally. I'd need to look that up. But I would suggest that there are millions and millions of people using Bitcoin every single day. And for them, Bitcoin's totally normal. They're already using it. And so yes, it's completely legal. Now there is an interesting bit of legal precedence that was set around software and software's ability to be a form of freedom of speech. And therefore, under a US amendment to the Constitution, it is never illegal to have any kind of software project. So, in short, absolutely. Like, it depends on your jurisdiction how Bitcoin gets looked at, but it's not illegal. And I think it would be very, very, very difficult for anyone to ever argue that it should be, based on the fact that software is just language, and language is protected under freedom of speech rules. So, in spite of some of the chaos you might have seen or witnessed in the last couple of years in relation to digital censorship, COVID, lockdowns, all the craziness that's been going on, at the end of the day, freedom of speech is written into the Constitution of the United States, and therefore software goes with that. And I'm sorry, I cannot remember off the top of my head the specific court case that this refers to. Now, where is Bitcoin illegal? Well, you've definitely got to be careful how you look after it, and you've got to be careful about how you spend it. So, for example, here in Australia, the Australian Tax Office looks at Bitcoin as a taxable asset. So the capital gain, if you buy Bitcoin at $10,000 and you sell it at $100,000, that $90,000 gain is taxable. So different jurisdictions will have different tax treatments for it. If I was sitting in the Isle of Man, in Dubai, in Portugal, then you'd have friendlier tax legislation for it. So it all depends on like where you are as to like what that framework is. But it's a very simple answer. Like, absolutely, Bitcoin is legal. Absolutely, it's legal. Number 6, how do I buy Bitcoin? Okay, great question. One of the most important things is to start using this thing. So, no, okay, first point, the worst allocation to Bitcoin is 0. So you got to get off 0. And I like saying along these lines, which is, you go to the horse races, you pick up the race card. There's 10 horses in a race. One of them's got a really stupid name and a pink hat, and you go, that's the one for me. And you put your $20 on, and for 5 minutes you're just completely zoned in on that horse, even though prior to that it meant nothing to you, and afterwards it might mean nothing either. Kind of the same thing with Bitcoin. Is as soon as you've got skin in the game, then your attention gets zoomed in, and you're like, hang on, what is this thing? And the price might shoot up and the price might come back down. But the closer you get to it through that experience, it opens doors and it really starts to have an impression on you. And you go, okay, well, hang on, maybe I should look into this more. What does it actually mean? So part of that is actually use Bitcoin. So how do I buy Bitcoin? Well, maybe I'll just like open this up to how do I get Bitcoin? First of all, I could send you some, right? But the first thing that you need is a Bitcoin wallet. And if that was the case, so I'm going to make a donation to you. I'm going to send you $10 worth of Bitcoin. So you go onto your phone, you get onto the App Store, you download whichever wallet you like the sound of. There's different types. You've got custodial, non-custodial. I would always advocate for something called self-custody. And I would always advocate for someone to take their Bitcoin off of the Bitcoin exchange. So step number 1 would be like, I'll just give you some, right? I'll donate it to you. You need a Bitcoin wallet to do that. For this type of small transaction, I often recommend one called a Moon wallet, MUUN. And it'll ask you to write down the seed phrase, which you can keep on a piece of paper and keep that somewhere safe. And so if you ever lose your phone, then you can get that piece of paper and you can recreate the wallet somewhere else. Now, that's a simple me making a donation. If you wanted to buy it, well, actually, shout out to Jaden. He asked me this question the other day. If you had cash, how would you buy Bitcoin? Well, you could take that cash to your local bank. You could put it into your bank account, and then you would set up an account with a crypto exchange or a Bitcoin only exchange, preferably in whichever jurisdiction you are. And you would then send your dollars, for example, to the exchange. You buy your Bitcoin, and then you send the Bitcoin from the exchange to the self-custody wallet I just recommended. Equally with cash, you could go on to, I think there was a website called Local Bitcoins, and you could organize a meeting with someone and you could pay cash to someone who then sends you Bitcoin to that self-custody wallet I talked about. You might even know someone who's a Bitcoin miner and they are generating virgin coins, and you want what's called a non-KYC Bitcoin stack. That's know your customer. And so you would go and take your cash to the miner, and then they would send their Bitcoin to your self-custody wallet. Now, this is a good point around KYC, which is and it's kind of back to that previous question about legality. Like, Bitcoin is absolutely legal. Where modern government and modern central banking is slowing down, well, I'll say it like this is even better. Bitcoin obsoletes central banks. Big deal. Central banks don't like that. Now, Bitcoin can't be stopped. Otherwise, it would have been already. And when you start digging into the design of how it functions, you see why it's been impossible to stop. But how you might slow it down is you'd make the on-ramp to Bitcoin really, really painful. And so they have all sorts of things that slow down they slow down the pace of capital from the old into the new. And some of those will be know your customer rules. Some of those will be anti-money laundering rules. And so when you're moving digital cash, like a dollar, like a euro, like a pound, into Bitcoin, and you're using these crypto exchanges, they will all ask you for driver's license, address. They might even ask you for proof of funds, especially if it's in large amounts. You might have sold some real estate, or you might have sold some investment portfolio, and they're like, well, where's the money come from? And in my experience, you've got to give them that information in order to get your Bitcoin and then get it to a self-custody wallet. And what's funny is I have found increasingly the day that I get my Bitcoin into self-custody, I just feel so calm. But it's quite treacherous getting there, especially if you're doing it in size, because they could stop you at any point, right? I've had banks freeze accounts. I've had crypto exchanges disappear for a number of days and the transaction's just gone. You're like, oh, fuck, where's my money? It's like losing your wallet, but on steroids, right? And yeah, so you'll find when you're buying Bitcoin, they make life difficult, and they're doing it on purpose. It's also not made any easier by the fact there are a lot of digital scammers out there that are guised as crypto projects, and the banks are having to try and protect people from fraud, from genuine fraud. So, they might have an online bank transfer limit of $10,000, or they might have a monthly limit, who knows? But just be very wary when you choose your partners when it comes to buying Bitcoin. I would always try and get recommendations from friends. I would always try and stick to Bitcoin only crypto exchanges if you can, because I think they take a lot less risk. And whichever jurisdiction you're in, you'll find one or two players that are Bitcoin focused, and I would highly recommend doing that. I hope that answers the question, like, how do I buy Bitcoin? But long story short, there's essentially a process of buying, and then always, always you want to end up in self-custody where it's only you in control of that wallet. What is a Bitcoin wallet? Okay, so beginner's content, I don't want to get too technical, but essentially it is where you store your Bitcoin. So there are different types of wallets. A common trap to touch on, which I kind of did in the last one around Bitcoin exchanges, is if you open a Coinbase account and you send your dollars to Coinbase and you buy Bitcoin and you just leave it there, Coinbase being the most famous exchange there is, that's really just an IOU for Bitcoin. That's like having a derivative of Bitcoin. You have no idea if it's actually there, and when you one day go to get it out, like, it might not get sent. So be very, very, very wary of ever leaving Bitcoin on an exchange. But then there's different types of wallets that I think through. This isn't very technical necessarily, but this is how I would think about it. So, like all things, you've got trade-offs different places, right? You've got ease of use, you've got security, you've got long-term planning, a number of different things. To take the first step, like get your Bitcoin off the exchange. Now, the first step is you probably want to get it into some kind of self-custody that is it's what's called a single signature. So this is basically the most simple of Bitcoin wallets, which only requires one signature in order to send anything. So that's basically a one key wallet. And you can have multi-sig where you can have a 2 of 3 multi-sig. So you'd have to have 2 out of 3 keys in order to send anything. Then you can have something called collaborative custody, where someone holds one of those keys for you. So you have one key, they have one key, and the third key is stored in another place. You can then use what's called a custodian, where you actually get a industry-specific player to store your Bitcoin for you. And there's lots of different types of wallets that are popping up. Some are insured. For example, like the guys who are building Anchor Watch, really interesting business where they've actually gone to Lloyd's of London and figured out a package with an underwriter as to what it would mean to insure Bitcoin. Really cool. Rob, I met at Cheat Code Sydney. Shout out to Rob. So there's basically different layers of technicality. There's different wallets for different reasons. Another way of thinking through it is, well, first of all, is like portfolio allocation. So when people say to me, like, how much Bitcoin should I buy? Well, one way of looking at it is calculate your net worth, assets, take away liabilities. Okay, what's 1, 2, 3, 4% of that? Okay, now you've got a dollar amount, smash buy Bitcoin, sit on it for 3-4 years, see what happens. I wouldn't be scared if that, I mean, it depends how wealthy you are, obviously, but if you lose 1% because you fuck up the custody of it, well, it's 1%, right? It doesn't matter that much. But as those numbers start to get more meaningful, then obviously how you custody that Bitcoin becomes more critical. And like being your own bank is not as straightforward as it may, it's a good catchy sound, but you're taking responsibility for your wealth, and therefore you've got to store it properly. So what I often recommend when you're taking this very, very seriously is you want to have a multi-sig wallet. So you take the 2 of 3 multi-sig as an example. I've been a user of Unchained for a long time, and you can then separate those keys in different geographic locations, which means that it's very difficult for someone to steal your Bitcoin because they don't know where the keys are. And even if they find you and one key, like they're going to transport you with a sock on your head to somewhere, at threat of gunshot. Like it makes it so difficult to steal. I think the deterrent is strong enough to avoid people getting into that nasty situation, admittedly, which is what's known as the $5 wrench attack, or at least when a wrench used to be $5, it'll be $25 now probably. But so what is a Bitcoin wallet? It's where you store your Bitcoin, and it's very, very important because, in my opinion, this is the superpower of Bitcoin. Is not only are we so early that the adoption curve, it means that the capital growth potential on this thing is absolutely insane from a risk reward perspective, like an investing term. It's like the upside is so high, especially in comparison to the downside. But it's not just capital growth potential, it's also counterparty risk. So when I get Bitcoin into self-custody, you cannot increase the 21 million network size, right? And therefore the supply of money cannot change. So you guaranteed to own a percentage of that network today as you are in the future. Plus, it's very, very difficult for someone to take the Bitcoin out of your self-custody. Like, how are they going to actually do that? So unlike having money in a commercial bank, NatWest in the UK or Westpac in Australia, or whoever it might be, they can just freeze your account tomorrow, right? Like, oh, sorry guys, you've got involved in some freedom of speech spat on Twitter, and now we're just going to completely nuke you and cancel you, and you can't get your money. Bitcoin doesn't work like that. That's why there's a great phrase of not your keys, not your coins, because if you have the keys, you can move the Bitcoin. If you don't have the keys, you can't move the Bitcoin. It's that blend of capital growth with then counterparty risk, which is just, in my opinion, complete dynamite. You're like, bring it on. That is all I want to do with my money, is sit in that sweet spot. But it's quite treacherous getting there, as per the last question. A final thing, I guess, to touch on is, and again, I'm not super technical, so I would always recommend leveraging other people's expertise. And I love meeting and speaking with more technical people because they help give me great confidence that they've looked into the nuts and bolts of how this actually works, and they're using it for their store of value and primary form of money. And if that's the case, you're like, okay, well, I don't have too much concern about how it actually functions on the back end. But there's an example I want to run through quickly, which is a single signature self-custody wallet. Normally will involve a hardware wallet, such as something called a Trezor. Another famous one is a Ledger. There's a Blockstream J. There's loads of different products coming out. But that key is like a little USB that you stick into your computer, has a keypad on it and a PIN code. And it's basically, if you think about your wallet that used to have your credit cards in and cash and a couple coins, you might open it up like this. Well, the hardware wallet is kind of like opening the wallet up, but it's not actually the wallet. You can sign transactions and stuff by opening it up, but really what a Bitcoin wallet is the seed phrase. And so you get 12 words or sometimes 24 words, depending on how you programmed it. And if you lose the hardware wallet, or the hardware wallet is broken for some reason, the key that is, then all you need is this seed phrase, and you can recreate that Bitcoin wallet anywhere at any time. So really, the most important thing to look after is that piece of paper with the seed phrase on. And you could make copies of it, for example, and keep them in different places in case one was to disappear. The problem, though, with a single sig is if someone gets hold of that seed phrase that isn't you and they're a nefarious actor, they can recreate that wallet themselves somewhere else. And that's then the beauty of this multi-signature, where even if they get that seed phrase, they need two other ones. So they need one other one to create a key pair to move anything from the 2 or 3 multi-sig. Long story short, there are a lot of people out there that are far smarter than me that have figured out really good ways of custodying Bitcoin. And just remember, not your keys, not your coins.